Hi guys, how are you doing? Welcome to this webinar of the week. So we're going to check on some few pairs here, starting with the Euro USD. All right, we're starting with the Euro USD on daily time frame. When check on Euro USD on daily time frame, what do we have? We can see if we check on the weekly time frame, the pair is still bearish. The pair is still bearish on the weekly time frame. And we can see what is happening here. Just a minute, let's check on the weekly time frame. Yeah, on the weekly time frame, we can see the pair is very bearish. The pair is very bearish because our last inducement is here, right? This Euro USD. Let me just close this watermark so that you can have a clear chart. On this week, you can see this was our previous inducement here. Previous inducement is here. Then our main low is here initially, but the price happened to sweep this low. You see, this is not a breakout structure. Yeah, we got this breakout structure. Actually, is a breakout structure here. This one is a boss. Once you get this boss, then this is your high. Then the price took out this inducement again here. This inducement, then this is our low. Price break above this high, which is a choke. This was a sign the price want to go up. Give us a choke and was the inducement. For you to buy, you need inducement. This was the inducement taken out here. Inducement taken out here, then this is our high right there. So your decisional order block to buy was this one first, right? Price gave a reaction and dropped to the downside, and price came here to the extreme or B. This was the extreme order block there. Sorry, what is this? Extreme order block here. That's there, and it goes to the upside. Price goes to the upside and again failed to reach the upside because there was this order flow that was unmitigated here. If you check here, this order flow, the last buy before the sale, this one, everything mitigated. Everything's mitigated. Look from this, the buy before the sale, this order flow was left and mitigated. And this one, everything down here is mitigated. If you check well, you can see. Sorry. If you check it well, you can see this order flow is mitigated here. The last buy before the sale. Yeah, we can see. Everything here is mitigated. Mitigated. Everything is used up. So this is the order flow that, sorry, the order flow that was left and mitigated because you can see you had this fair value gap here. This fair value gap here. There, price stops there and runs to the downside. So by breaking this low, we get a new change of character here. By breaking this low, we get a new change of character here. Right here, if this low is broken, the price closes the candle. There's a good choke. Once you get this choke, what happens here? This becomes a major high, and you look for a new inducement. The new inducement is here. Once you get that IDM, once you have that, you can have this as your low, right? And on the weekly time frame, we can see we have our levels here. Point of interest, this is the extreme order block that's not mitigated, and everything here is mitigated. Look at this last buy before the sale. So the flow right here. Yeah, this order flow here. Right, this order flow here is already mitigated there. And again, this one. Check well, you can see that order flow is also mitigated. Everything here is mitigated. This remaining zones, everything is mitigated here. Check well. Everything is mitigated except this place, also mitigation. So we find that this place, everything is mitigated except this place. So this price in the near future, it might push to this high. So, right, you might push to this high. But what are we having here? Look at this. This price of taking out the inducement, it's kind of trying to push to the high, to this highs here. So we can see, according to this, we have this internal, what we call the internal inducement taken out. IDM, and this is your high is this one. Then on the weekly time frame, do we have another block here? We don't have, we only have this one, right? It's a weekly order block. So this price is likely to push to this low, to this order block tap here, and we can push to this high before price going to the downside. So once we have that, we can already locate these zones as our points of liquidity. These are equal lows. These are zones that are likely to push this price to the downside, and we can see right here, we have our fair value gap here. So this means that this price is likely to push down from these highs, because you can see the internal inducement on what? On daily, on weekly time frame. This is what we call the internal inducement. And the price, we have this supply here, extreme supply, and was tapped. So the price is kind of pushing to the downside. So you can see this one is a sell. If we drop on daily time frame, and you can see the continuation of the price after tapping here. It took out this inducement here. This the valid inducement is here, right? This is a valid inducement. Price takes out the inducement, and this is your low. This is your high, right? Then you have this the main low here. Price is pushing to the downside. This one is a break of structure. The boss. Now, where's the new inducement? The new inducement is here, which has been swept. After the market swept that inducement, I would have wished to sell on this supply here, but the price is kind of going to the downside. We can see the strength of the price trying to go to the downside, and this is a single candle order block confirmation. You can see the price is really trying to go to the downside. So we can drop on 1 hour time frame and to try to see if we can find any zone to continue looking for sell. Look, remember, this is the zone you're looking at. This is the price that you expect to drop. So you can check on 1 hour time frame to see if we got the change of character and also the inducement. You can see on daily time frame. This is our change of character for ourselves, position yourself on ourselves. There's a choke. When you get that choke, where's the inducement? Got this, your inducement is here. This is the main price. There's no inducement here. This means that this is a valid inducement. Also have that inducement there. Where's your low? This is your 1 hour H1 low. Then what did this price come to? You can see on this highs, everything is mitigated except this small order block there, this small order block, but price failed to reach there, but actually swept some liquidity there. After sweeping liquidity, the price kept pushing the downside and broke this low again. Is a new break of structure here. Once we get this new break of structure, where's our high? This becomes our major high, this one. Once we have that high, where's the new inducement? The new inducement is here. There's a new inducement. Inducement taken out, this is your low. Once you have that low, where's your supply? You can see the price taps on to take out this inducement, pushed back to this high, right, to this place, tapping here, and price again went to the downside, where broke the structure here. If the price breaks the structure here, gives a boss here, where's the high? This becomes your major high, and this high, and this is the new inducement, this one, right? This being the new inducement was a low, this is your low, and the price seems to giving a good reaction on this supply, right? On this supply. So you can see this being a supply, which you're supposed to sell here, but now there's only one problem. Look at this. All of these zones, they all look equal. Okay? All of these zones look equal, which is a sign of liquidity resting above this high. And this becomes a very dangerous zone to look for sell, of which for me, I'll not recommend, but I'll prefer to use this supply above here, right? We want to sell above here. So right now, I think the price is likely to drop a little bit, then we can push to this high, take out this liquidity, and we can sell. So in 1 hour time frame, that's what I'm seeing on EURUSD. and I cannot say anything else apart from that. Think price might just go down if possible, but at the end of the day, these are very sensitive zone that if you position yourself there, you have to be very careful because there's a lot of liquidity lying on this high. You see this high. So the moment I'm aware of that, cannot open my position there, but I want to sell above here. This is the EURUSD. So let's check on a different pair, any other pair that people trade the most. Let's talk of GBPJPY. When you look at GBPJPY on daily time frame, what can we see? On GBPJPY on daily time frame, when you check here, we can see the pair is very, very bullish, and actually it's really, really pushing to the upside. Okay, you can see the last inducement is here, was here on daily time frame. Inducement taken out, it is a high, and the price tapped on this demand here, right? Price taps on this demand, and we are likely to keep pushing to the upside. So this is a high. If we want this price to break here, so this means that the price is really, really bullish. And once we have that, what can we see here on GBPJPY? You can see the price is bullish, so we can drop on 1 hour time frame. And we want to check on that continuation of that price. When you check on 1 hour time frame, just to see, we can see the last inducement was here, right? Inducement, not even this one, but actually this one. Once we have that as our inducement there, inducement taken out, this is our high, this is our low, this is our new breakout structure here. We get the new breakout structure, the new boss, then where's the new inducement? The next inducement was taken out. Let's use this one. Looks more better. Inducement taken out. Then was your high. Your high is this one. Once you have that, we can see price tapping there and just sweep some liquidity on this low. Like this. See, just some liquidity here after taking out this liquidity. I don't know if we took out this liquidity. Yeah, there's a sweep if you check very well. You can see there's a sweep of liquidity here, just sweeping that low like that, and the price went to the upside. And right now, we can see if, let's see if we get a new break of structure. We don't have a break of structure here, so we don't have a boss, which means that this price showing signs of a sweeping liquidity. You can see here there's a sweep of liquidity here. After the price sweep that high, and we can see our single candle order block here trying to come in place. So what does it mean? It means that for this price to go up, it must take out this inducement because we know that the price is very bullish and our strong demand is here, right? It's a very strong demand, this shadow, because it has swept the previous inducement, right? The previous candle, I mean, not inducement, but the previous candles there. And just use X there. Once they sweep, this a very good, clean demand that I want to see the price. All right, price drop, take out the inducement, drop to this low and go to the upside. That's what I want to see. So this is what I'm expecting on Euro JPY and the GBP JPY there. So any other pair we can look at, let's check on GBPUSD. On GBPUSD, if we look at it, we can see on daily time frame what is the price doing. So on daily, the price seems to be so bullish. Then I'll prefer to use a weekly time frame, a bigger time frame, to see exactly what is going on here. When we look at this pair is bearish, very, very strong bearish. I see this last break of structure is here. The last break of structure is here, boss. Once we have that break of structure, we can see our inducement is here, taken out. Price takes out the inducement, and actually it tapped on this supply here. This is the last supply that tapped there, and the price went down. So this is your high. Then this is your inducement here. Once you have that inducement there, you can see on this inducement, we have this low here. Have that low, and our decision order block is here and happen to fail. Once it failed, the price will always come to the extreme. Look at this. The extreme zone is here. Right, using that place. It's a very extreme zone here. This price is likely to come here because look at this. Everything, yeah, it's mitigated. Everything's mitigated here. Now, where was the next zone here? Mitigated. And we can see the last unmitigated order flow is here. And this pressed up here and gave us more reaction. But this place up here looks more sensitive. So this price, when you look at it, it's very, very strongly pushing to the upside, because after the first order block failing, the price took out this inducement. Look at this. There's a most recent inducement taken out. Price taking out internal inducement. There's a very good demand here, because swept the previous, you can see this candle, sweep the previous liquidity here, right? Sweep the previous liquidity there. Let's use letter X there. You can always use X, sorry. X. There, sweep some previous liquidity there, and it was a good demand. And this shows you that the price is really, really willing to push to the upside. And you can see after there, the price again took out this, what we call the internal inducement there, and taps on this gray red candle, which is a good demand. Yeah. And price really pushing to the upside. So you can drop on, you can see already, you can see the price is very bullish. So the moment you come even on daily time frame, we already know, we already know that the price is really pushing to the upside. You can see this is where the price taps here. And remember, if you're using the weekly time frame, you can always come to the 4 hours for confirmation. So I'm going to go the 4 hours because I've done my analysis on weekly. This is the last demand, this price taps here. Let's see. Okay, on this demand, if we refine it, we can see we can have the first demand here, right? There's a first demand right there. Okay, I want to capture this candle here around this zone, and we can have our another demand where around this zone, right? This one. This looks to be 2 points of interest that we want to see the price give a reaction on these 2 zones. Yeah, but you can see what happens here. The price came to fill some fair value gaps here. Okay, let me see. Everything is mitigated. This candle is mitigated. Okay, I can take the whole of this one. At least here. Yeah. No, just a minute. Let's see. There's something here I'm not seeing well. Let me just open up more clearly. Let's see, everything is mitigated. This candle mitigated. That one is mitigated. This one mitigated. So the next candle is this green mitigated. Then if it's mitigated again, what's the next candle? This one mitigated. So this candle of interest is this green candle. So we can take this one. Then the next extreme candle is this green. Yeah, this is the candle that's not mitigated because it has the fair value gap. It has the fair value gap. The moment it's not mitigated, this is our candle of interest because of this AVP, not a FVG, right? Yeah. So I want to see the price react on that zone there. But you can see price just taps there a little bit. Just a minute. Taps there and this one failed. So you can remove this one. Price taps there. Gives us what we call the change of character where here. Right? And for us, there's a choke. Then there's the inducement. Inducement is here. This is what we get as our inducement. Once we get the inducement here, with our high, this is our high. Then we can see what happens here. The price just sweeps this liquidity. But before that, look at this, what happened here. What happened earlier, the price sweeps this liquidity, right? And they break the structure to the upside. Yeah, give us a break of structure. Once we get the break of structure, and look at this as what? As our new inducement here. Once we get that inducement, look at this, the high. This is a high. Price taking out the inducement, and you can see price come back and sweep this liquidity here. So whatever the low is here, right? We had the low here, but what we do it, we transfer this low to here. So this low, this will come here because of a sweep of liquidity. And from there, we can see the breakout structure here. break of structure here, boss. And once you get that boss, with the new inducement, the price is now very bullish. What's the new inducement here? You can see our new inducement is this one, right? Price creates takes out the inducement and is still bullish. This is the high. Now, what's your point of interest now? The first decisional order block is here, right? This red candle. If the price comes here, you buy. If it fails to come here, extreme point of interest is here. This extreme point of interest. But remember, price has just taken out liquidity. So this means that tomorrow, or if the price pulls back to this order block, because you have already taken out the inducement, if the price pushes back to this low, to this zone here, and go to the upside, you can also buy there using a single candle order block. So this one is a price to wait, and that's what I want to look at here. I want to see how the price react on this one, demand, also on this one, and also on this extreme zone here. But the price is really bullish, and this one is a good zone to tell you that, to see that the price is trying to push to the upside. And we want to stay with the trend, because as you can see on the daily time frame, there's a strong trend to the upside here. The price is going to push to the upside so much, and you have seen a level, a zone up here, which is not mitigated. Look at this up here. We can see we have this zone here. It's a very good zone up there, but as for now, when you're targeting that high, this can be your target, as according to first time frame. This can be our first actually immediate target before we target this extreme here. So we can look at that, and we expect to get a strong buy to the upside. So the 4 hours time frame, the price is still bullish, and we want to look for a buy on GJ, right? On GBPUSD, I mean. Now, another pair that people trade the most, let's see. The other pair, which pair else can we talk about? The next pair I want to look at, let's say that gold, right? Gold also is a pair that people trade the most. So when you look on gold, use the daily time frame. You want to see what is happening with the gold. When you look at daily time frame, this was our last inducement. Yeah, this was our last inducement. Inducement taken out in the price. When inducement taken out is your high. Then there's our supply. This is our demand. Price steps here. It goes to the upside. Now, what is happening with the gold? When you look at it, price went up, but failed to close above here. Just swept that high. Price swept that high, and price started coming back down. What does it mean? What does it mean? This one is what? A decisional order block, all right? This was a decisional order block, and also it has just swept a previous candle there. That's why it was a point of interest. But to look at this one, we can see we have on daily, we have the last sell before the buy. This is our last order flow. It is not used up, right? An order flow there. That's that order flow, and the way is the next one, you can see the last sell before the buy. So again, you have this order flow here. These are the points of interest that this price is likely to push to these levels. The points of interest. So right now, you need to only look for a sell. As you can see, the strength of the candles and the price going to try to push down stronger. So we can drop on 1 hour time frame, and we can try to see what do we have on 1 hour time frame. In 1 hour time frame, we can see if this was the high, all right, this is the high. If this was your high, was your inducement. The first inducement is here. Is it really here? No. How to get a clear inducement that will act as a change of character. Let me work with this level. This works better. This will be a choke to the downside, and there's the inducement now. This means that for you to sell, you need inducement, and the first inducement that was taken out was this one. Right, that inducement taken out, and the price trying to go to the downside because there was this candle. You can see this candle took out the previous candle, took some liquidity, and this means that this is a very good decisional order block. Sorry. Decisional order block, this one. This one is a decisional order block because the candle just sweep a previous candle, and this can become our first decisional order block. The price taps here and goes to the downside, well and good, and you can see price trying to give a reaction. And where's the next level? When you look at this, you can see everything up here is mitigated. This order flow mitigated. This is a zone that's not mitigated here. Watching that, this is a zone that's not mitigated. So this is an order flow here that is not used up on gold, and the price, we don't know what the price will do when the market opens, because it's around 2 hours before the market opens, and we are likely, if it fails, it's likely to go up. Take out the inducement, all right, and we can buy below and rally the price until to this highs before we go to the downside. So the gold right now, the price to wait to see if it will push down. If it push down and break this low, well and good. But if it fails, then we need more confirmations there. So the gold, I cannot decide, but the price is actually going to push to the downside. That's what I'm seeing. And everything is mitigated. Why am I choosing this level as a point of interest? Look at this, right? Everything here is mitigated. Look at this zone. Everything's mitigated here. Everything is mitigated. Everything's used up. So this price only has to either go down or rally up and come to this high. So the gold is a sale, but we need more confirmation. Another pair, GBPCAD, as the last pair we're going to check on. What is GBPCAD doing? We can check on daily time frame first. By looking at the daily time frame, we can see it's very, very strong, very, very bullish. Now, we can just start from where it is right now. We can see the last inducement is here. Right, last inducement is here. Then where's the high? There's a high, there's a low. Then we have a breakout structure here. Boss. Also get the boss. You can see our inducement is here. Our IDM is here, and the price taps on this order block here, goes to the upside. All right. Break the upside, you get a new breakout structure here. Boss is our low. The new inducement here. Once we get the new inducement, with our high there, and the price breaks this low, right? Change of character, choke. Once we get the choke with the inducement, this high, takes out that high, right? Price takes out the inducement, and this become our low. Give us more reaction and fails. And it breaks, let's see, did it break our high? Yeah, break the high there, which is a change of character. This shows you that the price want to go to the upside, change of character, and we need inducement. Our inducement is here. Once inducement is taken out, that's our high. And the price, what happened here? What happened here? The price, where's our decisional order block? We can see this candle. Which candle? Okay, this is a place that we're expecting to get our first decisional order block here. Decisional order block here, but the price failed and went down. Price going down, what happened here? Price, when it went down, it closed below this zone. Let's see, this is the zone. The price closed below it. Closing below this zone, because I'm not seeing any candle here that I can use as a demand or something. Then the price rallied to this other side, all right? There's a new breakout structure to this other side. Is a boss, right? Taking out this low, price goes to the upside, and this becomes your major low here. Once this is a major low, is the inducement, because remember, you need inducement according to what we have right now. You can see this is the only inducement we have. The only inducement we have, but this is a daily time frame. So the price is really, really strong, pushing to the upside. If the price try to come back and take out the inducement, this will be our point of interest. But just before that, let's check on the 1 hour time frame. We want to see the momentum of this price to the upside. because you can see the price really, the stability of price is very strong. The price pushing to the upside. So when you look at this zone, you can see our last inducement is here. This being the inducement, this is your high. And where's your order block? We can see the last order block that was here. This one was mitigated, and again does not make sense because this is just an inside candle. So that's not an order block, but actually a good order block is here. This red candle, all right? This candle. That. This is an order block that you have here. But what you have, these other zones, these are just liquidity zones there. Decisional order block, then your extreme. What's your extreme? Let me see. Where's the extreme order block? You can see right here what we have here. This is the last inducement. Last ADM. This is the high. This was the low. Then the price broke the structure like that. That's the boss, and the price kept going to the upside. So your inducement, your extreme zone is here. Extreme OB is here. If the price goes below past that level, we'll get a choke and start look for a sale. But as for now, this is what we need. Actually, we need to see the price. Okay, give us a drop to this demand and we go to the upside. So guys, thank you for watching. Make sure that you subscribe and join our Telegram using the link on description. See you on the next video. And if there's any video or something you'd like us to touch on it, you'd like me to go through it, just drop your comment so that I'll try as much as possible to read your comment and respond to you. Have a good day, guys.